Okay, very good morning. It is Wednesday, the 17th of January. Hope everyone is well. We're going to have a look at a couple of things, some of the movement predominantly from yesterday, which was one of the more volatile sessions we've had in quite some time. Then we'll have a look through a few other news items, including that of Bitcoin and some of the cryptocurrencies, which have seen a pretty volatile move since the peaks of the price action we saw around mid-December, and then we'll look ahead for the calendar as well and what we're looking out for the rest of the session. So getting things underway, and first of all just having a look at the close on Wall Street yesterday, which was a negative one, with the S&P down about a third of 1%. The Dow was the only one that was pretty much unchanged, just very minor negative. Again, a couple of stats. The S&P's intraday move of 1.41% was the largest seen since early December, and in fact the fifth highest change in market movement since December of 2016. As a byproduct of that, the VIX then, that kind of measurement of market volatility, if you like, jumped just shy of 15% to 11.66. That's a fourth highest close since mid-September. So certainly market movement, and really that's been the case since we've returned for 2018, definitely has been a much more active than what we saw for the latter part of 2017 for sure, which was defined really by extreme low levels of volatility. So yesterday was really a game of two halves, to spin the pun, where in the first half it was all European morning led, where if anything it was more investor optimism, particularly to target big round figures across the three major US indices in particular. We saw, of course, if we make it a bit bigger, we saw 28, a run up towards that level in the S&P. The Dow went through that 26,000, and then the Nasdaq as well got up to levels unprecedented in that respect. That kind of had a bit of a drag on as well. European equities, the DAX, you can see this pretty wild price action here, and it really followed suit with the US futures sentiment. Even though it was early European trade, we then broke the kind of range highs technically of end of last week, beginning of last week, and that helped catapult the price. However, as the afternoon commenced, we came under some pretty aggressive selling pressure, and just while we're on the DAX, just looking at this price level here, although we're sitting around pivot in the daily price at the moment, there's obviously a fairly significant downside level just to keep an eye on from what really defined the price action from in the futures yesterday evening. And as you can see here along these various places where I've noted on this technical support around that 13,136, we'd just be looking at on the downside as a level of interest, I guess in between there and really what would be the S1 today, which was then close to the previous low on the 11th. Might be quite interesting to watch if in the scenario we get down to that point. Reasons behind the move, obviously, as I said, quite behavioural in the sense that the market tends to be drawn into these big figures to at least give them a test, and when they inevitably break, stop sitting above the figure, tend to get triggered, and we spring higher. The other thing, of course, is earnings, and they're starting to pick up a little bit of pace. Behind the roaring stocks are profit upgrades of an unprecedented size. Now, this is something we've mentioned a couple of times before, but this is really thanks to the tax cuts being passed into law in December in the US. It means that forecasts for 2018 profit from companies in the S&P 500 increased 3.5% over the past 4 weeks to $151 a share. So they're bumping up profit forecasts by an average of 3.5%. As you can see here, this is what they're referring to it on Bloomberg. They're calling it the melt up, not the meltdown. The earnings-led melt up. Here you can see the estimated EPS, and you can see the various waves that we've seen as generally if we've gone into a new year, they have been upgraded really as a sequence the last couple of years But what has been quite interesting, I think if you look at 2014 commencing, it was upgraded and it actually rose. Whereas 2015 it was upgraded but fell. Same case in 2016. And in 2017, the last part of the year, we managed to actually see profit forecasts getting a bit of a lift as this tax deal kind of got more and more airplay. And then here we are, we've had the most aggressive upgrade we've had so far. So again, with just economic conditions overall improving in the States and elsewhere from a global perspective, the corporate tax deal in particular as well laying its hand to a significant change here, bringing it more in line to where current valuations are, which now obviously lowers the PE ratio back down to levels kind of around 18 or so. And so this overvalued nature of, on a micro level, tends to not look quite as exacerbated. Now Wall Street has realigned, if you like, its outlook going forward, where companies are expected to become more profitable in that sense. Okay, one of the things though is we did see a bit of a breakdown in the equity price action, obviously yesterday afternoon. After we really peaked around the open on Wall Street, the S&P came under some pretty aggressive selling pressure. It was the same case as well for the other three majors. You can see here, this is the breadth of the price action going from a 28.0850 record all-time high down to 27.69 and a quarter. Again, this type of volatility in a price range swing hasn't happened in quite some time. Again, the stat was we've not seen that type of movement since early December, and it was the fifth highest percentage amount of movement since going back to December 2016. You can see though how the market still has inevitably this buy the dip mentality still seems to be alive and well. Even this morning, US futures are trading in positive territory, and we've retraced more than really 50% of that move. I guess on the upside, now that we're through pivot in the S&P, be interested to have a look at that 29 or 27.90 and three-quarter level, that being the support from the early morning of Monday price movement, and also briefly before then the eventual break that we saw yesterday afternoon. So be expecting a little bit of a resistance around there. With the Dow, similar case in terms of reflection of the price movement from yesterday, and likewise above its pivot level. So upside 26,000 would be keeping a close eye on as always as the figure. And then just before there, you've got the previous highs that were seen at around the Wall Street Open on Monday at 25,976. Whereas for the Nasdaq, again, just around its pivot at the moment. Looking here, if we came down, probably what would look quite interesting if we did see some downside pressure at the open later, is if we were to come down to this kind of area, I guess here, then we'd be looking at potential entry points to get long the market again, given the previous point of resistance back on the 12th, and the support is provided really in the overnight session and late yesterday. So nothing really to detract from the view that even though we had a fairly aggressive pullback yesterday, our bias is still to be long the equity market, not short. And so accordingly, the same strategy applies. It's about just looking technically for the best point of entry. And as I said, in the DAX, that gets quite interesting when you start to get down to the kind of just below S1, which if you go back on a slightly longer dated chart has some significance as a level. One of the other things that did get a bit of airplay yesterday as well, you've probably read the news and caught up on this anyhow, but just to recap briefly, House panel subpoenas Steve Bannon. What we're looking at here was former White House chief strategist Steve Bannon has been subpoenaed to meet with special counsel Robert Mueller or appear before a grand jury hearing evidence in the Russian investigation, according to people familiar with the matter. And obviously this tends to, this type of news, be a negative for US equity markets, given the fact that it might shed light on some illegitimate activity from the president and his administration with dealings with the Russians pre the election. And so that tends to then heighten the risk surrounding Trump and then overall his implementation of his fiscal policies. Didn't get too much of a reaction on the back of this. On a single stock perspective as well, if I just go back, this was one of the other stories that obviously was in some focus as well. This was General Electric, one of the world's largest companies. The CEO renews pledge to study a breakup after $6.2 billion stumble. So in a sense, they've taken a charge of $6.2 billion related to an old portfolio of long-term care insurance. So another setback for the company, and they're going through further restructuring at the moment, spinning off assets and so on and so forth. But that was also a bit of negative news into what otherwise, generally speaking, has been more of a positive sentiment around the equity space at the moment. The final thing, I guess, probably to touch upon, that some people were talking about yesterday, particularly when the markets were coming under some pressure. We've got a revisit of the potential of a government shutdown on Friday. The latest update on this: efforts to avoid a partial government shutdown are still evolving. Republican leaders weighing a move to extend the deadline until 16th of February. So they've kicked the can a couple times. Well, if it ain't broke, don't fix it. Let's just kick it another month down the road. And that appears to be what the current tactic is, with the proposed measure not expected to include the DACA program. If anyone doesn't know what that is the Deferred Action for Childhood, which is basically their immigration policy for minors. Contentious issues at the moment about automatic budget caps on government spending. So obviously the Republicans under Trump's stewardship want to spend and do infrastructure spending and so on, but the Democrats are likely to be more anti that view. And then there's a few other things as well that they're still debating. So at this point, I would say risks surrounding a full-blown shutdown, I think, are still, as they were previously, fairly minimal, but definitely warrants monitoring the situation. We're midweek. I'd expect the conversations on this and the sources and so forth to materially increase in terms of frequency of commentary as we get towards Friday and they start discussing this more thoroughly towards the deadline. It always typically goes up to the deadline before they make a concrete decision. Will there be much of a response in the market if they do indeed compromise and make an extension? I think not, because markets are pretty much used to this fanfare, if you like, that comes around every couple of weeks at this given point in time. Okay, quick look at, it's amazing actually, when I come into work, obviously I scan through Twitter. One of the things I do like about Twitter is not just keeping on top of the news and what the stories are, but generally speaking, you get a bit of an idea about sentiment, because you tend to find that there's a common theme of which most people are tweeting about, and then that kind of gives you a bit of an inkling of what the focus is right now and of investor sentiment, at least on the short term intraday. And the biggest thing that I noticed is that every single person on Twitter this morning is talking about the crumble of crypto at this point. Now, has it got to that point? I think that's a little heavy-handed, but certainly yesterday saw Bitcoin, we've seen Bitcoin steady after a 26% slump as traders brave volatility. Rival cryptocurrencies Ripple and Ethereum fluctuating, but generally speaking, things like Ripple have seen an incredible fall since the peak only a few weeks ago. So why is this happening, first of all? And a couple of things I just want to quickly look at, and a couple of things that people have also noted, and also just a function of Bitcoin. So if we look at the chart here to have a look at, this is the Bitcoin price, and we're back sub 11,000 this morning. Now, before I get on to looking at this chart a bit more technically, a few things. Why has it been weakening? Well, there seems to be a little bit more of an escalation of going through a period of regulation, which actually is probably a necessity if crypto and Bitcoin is to have any type of longevity. This is a natural and logical process of which this asset needs to go through, which is evaluation via regulators to see what action should be taken. The only thing is that everything's been met quite negatively at this point, i.e. You've had people like South Korea shutting down Bitcoin exchanges. China are escalating their clampdown on cryptocurrencies with kind of task forces around the country and so on, trying to ban illegal mining where people aren't paying basically for electricity, which the government's losing money, and so on and so forth. Now, why is it that Asia is so important to the crypto world? Well, if you look at Bitcoin specifically, Japan, South Korea and Vietnam, so just those three countries on their own, Japan, South Korea and Vietnam, they account for 80% of worldwide trading activity of Bitcoin as of the end of November last year. So some data I was just looking at this morning. So the predominant amount of volume comes out of the Far East Asia. And so hence the reason why news flow pertaining to those particular regions like China and South Korea has such a significant impact on the price. Now, one interesting point, I was just listening to a chap talking on one of the news networks yesterday. He was talking about the seasonality of Bitcoin around January, in that typically nearly every year Bitcoin, although granted was much lower price levels, has sold off in January only to then rise later in February. And what they're suggesting here is that this has a big part to do with Chinese Lunar New Year, and that actually what happens is, because China's such a big player, the retail investors then basically exit the market to put their cash back into a fiat currency to buy products or whatever, presents, jewelry for the Lunar New Year. And then so you're getting an extraction of a large amount of liquidity from the market, generally pulling the plug, and then they go back to it thereafter the holiday period. Now, I think that's a little bit rich using historical precedents, because we've never been at this high evaluation of the price, and also we've never seen this type of fundamental news like we've seen with South Korea and China. So I think it's a bit of a push to stretch the seasonality story that far, but you know, it makes kind of logical sense, I guess, and I thought I'd mention it as a case in point. But looking at the price here where we are, and today could be significant because we are within striking distance of 10,000 again in Bitcoin. Now, we did of course we fell in about 20 minutes yesterday from about 13,800 to sub 11. So, you know, this market can get its move on pretty quick. And now we're sitting within a 1,000-point range back of that 10,000. It definitely does need to be watched. Now, that's a really big level psychologically. When we broke 10, that was really open up the floodgates to then the push inevitably up to 20,000 in about a 2-week period. If we break 10, then it certainly does get very interesting to see. Then I would anticipate a lot of people will start then pulling their trades at that point, and I would expect if we break 10, whether that will happen today or this week, or if it does happen at all, if it does happen, I'm going to say if we break 10, we go to 8,000 within minutes. I'm not going to say hours. I'm going to say it's going to be within an hour. We'll go from 10 to 8. And if we break 8, then I'd say the next stop here, looking at it, is down here. This is probably the area of interest from the lows that we had in kind of November, which would be around 6,000, 5,500. And then below there, the 5,000 level, because then you can see when we were moving higher, these round figures did play a big part, and so now they've set some historical technical levels of significance on the descent. But 8 could become 5 pretty quickly at this point. So I think 10 is the key here, and obviously we got close to testing that. We saw a really strong bounce from basically 10.5 back up towards 18 almost. But the market just feels a little heavy, and what does feel different here is that just as much as the euphoric almost behavior that you were seeing certainly in the media's attention it's now completely flipped, and everything you're reading is all negative. And so for the inexperienced kind of person trading this market, like I've always said, if you're in this for the long game, then you've done the right thing. I think you can hold these, and let's revisit it when your kids go to university in 25 years time or 20 years time, and then fine, good trade. But this isn't really a tradable asset in that sense. It's 100% speculative at this point. So just be careful, that's all. Okay, moving on. Let's have a look at the calendar for today. We're looking at a couple things. This morning you've got inflation numbers coming out of Europe, but just keep yourself in check, because this is the final reading. It's unlikely to create a huge amount of market movement, and inevitably final readings tend to have that kind of more muted impact on the price. But looking at the euro this morning, obviously the S1 level, which just below there, about 4 pips or so, you've got the low support point from yesterday afternoon. So it's kind of on the range, on the low side. You'd be looking at that with some significance. The dollar, which did see a strong bout of strength yesterday, is up again about 0.2 at the moment. Remember, we had the ECB come out, various different people, Villeroy, source comments, all trying to kind of talk down this renewed hawkish expectations of the ECB, but that really hasn't had too much of an effect, because overall we still remain elevated here at the 122 mark at the moment. Otherwise, for the morning, it is pretty quiet, and really we've got to look to the afternoon in terms of the scheduled calendar. You've got US industrial production, cap utilization, and then probably what's going to be one of the most interesting ones is the Bank of Canada. Now, the reason for that is because, as you can see here, we're expecting a 25 basis point increase from the Bank of Canada to take rates to 1.25%. So just looking at some commentary here from analysts at Bank of America who are in line with the market, they're looking at a hike also. They are saying that there's an 80%, the market is 80% priced for the Bank of Canada to hike today. What they were saying here is that if the Bank of Canada opts to wait, i.e. not rise, given NAFTA risks and remaining uncertainty regarding the data, Bank of America think dollar CAD could potentially rally by around 2% in a straight line. So just to show you what that would be like on a chart, let me bring in dollar CAD here and what a 2% straight line move would look like. So you're talking about trading 124.50-ish at the moment. That's a move straight down 200 odd pips more, down to 122, if that was to materialize. So certainly, given a heavy leaning towards them taking action today, it would be a big surprise if they did not. As always with the Bank of Canada, don't forget this isn't just a rate announcement. You get the monetary policy report as well, and that also is very crucial for the overall outcome of direction post the initial knee-jerk spike, because that's when they'll outline their policy outlook going forward, which is always influential as well for the price of the currency. Other than that, you've got the API crude oil inventories later on this evening. Again, these are a day later than normal given the US holiday that we had. And then you've got the DOEs coming tomorrow. You've got a couple of speakers as well. Just flipping back onto the charts quickly, just want to bring up the euro and on a minute, and also the DAX. I can just see there's been a bit of movement. DAX, not too much, but the euro under a little bit of pressure here. ECB's Novotny has just said the euro exchange rate must be observed. So again, this is part of their currency management, if you like, indirectly, without being too explicit, looking to try to counteract the strength of the euro. So what do? You say euro exchange rate must be observed, i.e. you're telling them that you're getting ready potentially, and if the move was going to continue to happen, then action may be warranted. So you've just seen a quick fall from around 15, 20 pips or so, nothing massive. Obviously this comes in the context of a couple of other dovish comments that we had yesterday, but they continue to be certainly mindful of this pretty quick rise that we've had in the euro of late. So just be careful of that. All right, going to leave it at that and wish you a good day. I'll be in the chat room with Sam as per usual should you have any questions. Okay guys, thanks very much. Have a good day.